Most people come on YouTube to find a sexy, shiny new indicator. That is not what this channel's about. I'm here to teach you the real stuff that moves the needle. I've been in this game for 8 years. I've been through suffering, pain, hardship, and loss. And I know that once you lock down the technicals, that's only the first 10%. The remaining 90% is really understanding your emotions, mastering your mind, and really nailing down your trading psychology. So this video isn't going to be sexy. It's not going to be a get-rich-quick scheme, but we're going to get into the real stuff, the stuff that's seldom spoken about, the stuff that really makes a fucking difference. Not some new trading course, but all of the stuff up here that you really need to nail down. To do so, I've been studying students of mine quite closely in my Discord group, and I think I can whittle down the main reasons why people really fail on this road, and it comes down to 2 traits: greed and ego. So get a coffee and get stuck in. Now, for some reason, there is almost no content on all of this stuff. Talking about greed, talking about ego, talking about mastery of the mind. So for me, I get pretty pissed off by looking at trading content, to be honest, because anyone that's actually gone through the grind for any number of years will know that it's not about system hopping. It's not about moving from price action to order flow, switching up the time frames, learning new systems, learning new indicators, whatever it is, okay? But that seems to be where everyone funnels their efforts for some reason. Not turning a profit. Do you do a journal review? Do you work on your emotional state and your emotional understanding? No, you probably join another group, you look at someone else's system, see if you can pick new bits out. Should I be adding a VWAP? Should I be looking at Fibonacci retracements? Everyone's looking for this magic line in the charts. Essentially what they're looking for is a quick fix. But unfortunately, any of the pro traders that I know that this is just a sham, essentially, and that people should be diverting all of those efforts, all of that mind share away from technicals and into psychology and emotional understanding. And for some of you, you may not want to hear this. You may still be searching for that new indicator. You know, RSI isn't working for you. Maybe I should look at stochastics. No, the problem's not with the indicator, it's with you. First, greed. And I can beat this subject to death. I see it over and over again in new students of mine, and I also know from firsthand experience how much of a kryptonite this was for me personally. It's something which I feel a lot of resentment towards myself for, to be honest, because I was so obstinate, I was so stubborn. I wasn't really listening to my journal reviews and what my journal reviews were telling me. Essentially, I plugged so much effort into trading that I thought I was a great trader. I thought I was better than the markets. I thought I was better than my peers. I feel like the market sort of owed me for the time that I'd slogged, the time that I put into the craft. And as a result, I was chasing big wins. And this may not be big R wins. It usually was, but it was big monetary wins. So I was oversizing and I was taking too tight a stop. Now, if I was listening to this video a few years into my craft, I'd probably be tempted to click away from the video at this point. But for those that stay, good on you. You're probably listening to something which is quite uncomfortable to hear. But this issue of too tight a stop and too large a size, I mean together, both of them, I imagine this addresses 80% of the traders out there that are having issues. It's something that I did for way too long, and honestly, whilst I was doing it, made almost zero progress. Instead, just pure pain. I'd enter into positions and go, this is 100% going to run from here. I am certain the damage has been done, the retest has been made, whatever it is. So I'd enter into position with a pretty tight stop. I'd be looking forward and saying, okay, this is going to go to here 100% with certainty, with confidence, with arrogance. And as a result, I was picturing the imaginary dollar signs in my head. Instead of going, I can make a few hundred off this, it was, I can make a few thousand. Okay, let's size up so we make that a reality. What I wasn't doing is I wasn't picking the trade apart. I wasn't writing down the cons of the trade. I wasn't playing devil's advocate. All these essential processes that I do now fastidiously. I was trading cockily. I was trading greedily. I wanted to make lots of money from that trade. I wanted it there and I wanted it then. Now, I've said in previous videos that trading is not about big wins. Now, I'll say that again. It's not about big wins. It's about compounding thousands of good decisions. Now, if any of this resonates with you, then I want you to remember a mantra, something that I've been telling my students a lot recently. And the mantra is survive, then thrive. So first survive, and then thrive. So what does this mean? It means you need to widen your stops. It means you need to reduce your size, because when you smash a lot of size in a position, you start stressing about that position, because immediately as you go underwater, your brain starts to produce cortisol and your brain wants to take you out of that stressful position. So either you're stopped out of the position because you haven't catered for volatility, or you choke yourself out of the position and manually exit due to stress. Now, next time you feel like you're acting erroneously and making one of these moves in bad judgment, I want you to take yourself out of the position. Right? Look at yourself from a bird's eye perspective. Take yourself out of your mind and ask yourself, what makes you think you're good enough to trade in this manner? Now, unless you're a highly successful trader with a scorching win rate and profit factor, the answer is probably that you shouldn't be acting in that way. If I'm delivering this message to people who are extremely successful, then you do you. But if you haven't quite got there yet, you have to survive. You have to survive that initial stages of the trade process. You know, take a wide stop, take reduced size, build into your positions, wait for full technical confirmation. Don't jump the gun. Let the trade do its thing and let the trade breathe. And the reason I say that the first 10% is the technicals and the latter 90% is emotional understanding and trading psychology is because I see it all the time. Students of mine, I can see that their analysis is correct. They're on the money. They know where and when price is going to reverse more often than not. If they're not quite there yet, then fine, we focus on the technicals for them. But most of them have gotten to that point. They know where the market is going to reverse, but still they can't profit from that understanding. So first off, taking wide stops and taking reduced size is mandatory. And there are other tricks that you can use, like underwater scales, which is essentially where you 75% of the way towards your stop, you scale bids or asks. What you're doing here is you automatically get filled and build positions underwater. Let's say you've taken 50 or maybe 70% of your position in that initial installment. Now you have a remaining 30 to 50% in the form of limit orders within that underwater region. That if your initial entry goes against you, you're still getting filled and you're flipping this from a negative into a positive. Once you start getting into these areas and this remit in trading becomes far less stressful. And sometimes you may be making less money on a trade. Fine, because if those trades do run, often with wide stops, even with underwater scales, you're making less on the bottom line. But also with these approaches, your win rate is going to go up massively because you're giving the trade the respect it deserves. So what I'm trying to say is the route that may seem slower is actually the one you need to walk on. And you can keep driving in the fast lane, fine, you do you. But it's like the story of the turtle and the hare. We all know what happens there. And that philosophy is too true in trading. That path that doesn't seem too attractive, the path that seems slower, the path that seems arduous is in fact the path you need to walk on. And this ties quite nicely into the whole concept of ego as well. Now, I was going to call this video the death of the ego, the birth of a trader. And the reason being is because it's true. You know, if you're someone that flexes P&Ls on social media, if you're someone that adds to losers to average down, thinking that eventually they're going to be right on the trade, or if you're someone that acts impulsively and takes trades without any real thought process just because they think they're going to be right, then you're moving with your ego. You're not operating with your rational mind. You're not operating as you should be. As soon as you shed your ego, as soon as you realize that moving in an egoic, egotistical manner is stunting you, is crippling your growth, the sooner you'll get on that slow, steady, but certain path to success. And I think one of the biggest issues in this game is that most people that are drawn to trading are drawn to it because they think that they can make lots of money. I think one of the biggest changes for me personally was realizing that I had to stop focusing on the profits and start focusing solely on the process. If you think about legends in their own craft, like let's take Michael Jordan for instance, was Jordan playing for the money? Or was he playing for the game? Anyone that knows his story in any detail, or any other pro athlete, or anyone that's truly mastered their craft, they're not in it for the money. The money's a side effect of focusing on the process, focusing on being the very best, turning up every day, doing your best, and understanding and having a real understanding of what it takes to make it in that craft. It's hard work, it's dedication, it's determination, it's discipline, it's patience, it's stringency, and it's rinsing and repeating all of that over and over and over again. Not thinking about what you can buy with the profits of this trade, not thinking about that next new car that you want to purchase or the house that you want to move into. Focus on the process, not the profits. And I guarantee you, you'll see a massive change in your game. Now, the problem with ego, I think this is one of the reasons that trading is really, truly so difficult, is that nothing is black and white. You have to operate in the gray area as much as possible, and you have to find a balance in your craft. So yes, you want to be the very, very best. You want to adopt the Jordan mentality. You want to turn up every day and work your very hardest. But throughout all of that, you also have to maintain a super high standard of humility. You have to be humble. You have to turn up to that desk every day and say to yourself, regardless of my experience, regardless of my flight hours, how much screen time I've put in, I'm still an eternal student to this game. I'm not better than the markets, and I have my humility about me. Because if you don't have your humility, the market will humble you. I've seen this over and over again. Whether it's a beginner trader or an old boy in the game who's on a hot streak, decides to massively size up against his rulebook, against his playbook, drop all of his risk discipline and take that big plunge. These people, they get blown out. They don't last in the markets, because even if you've been in the game for 10 years, 20 years, and you decide to take that plunge, you decide to make that move and take massive size on that golden setup, you'll be put just in the same position as that beginner trader who was stressing out about losing 50 bucks on the trade. Never, ever, ever abandon your discipline, abandon your rules, abandon your humility. Never, ever, ever let your ego trade for you. Everything from these notions down to micro decision making that takes place on a day-to-day, all of these things make a massive difference. Now, I hope you understand how important all of this stuff is. It's the stuff that operates in the background, but it's the stuff that really, truly makes a difference. At the end of the day, end of the week, end of the month, or end of the year. This is how you grow, and this is how you progress. Now, we've touched on two major kryptonites, greed and ego, but we haven't spoken about dopamine. If you'd like to keep leveling up, click here and get stuck in.